Did your payment app recently ask you for your social security number? If you were thinking, what's coming next is not going to be very good, you're right. And so we're going to talk about it here on what's going on with PayPal, Venmo, and Cash App. I'm Matt Sorensen, attorney, author, podcast host, CEO. And in today's episode, we're going to be talking about why the IRS is requiring PayPal, Venmo, and Cash App to report your transactions on payment apps. Okay, so here's what's going on. The IRS has changed the reporting requirements on payment apps like PayPal and Venmo, where now they have to report business transactions to the IRS when the total amount in your account exceeds $600. This was a major change from prior rules, as the IRS only needed to report persons who received $20,000 or more in a payment app. By changing the amount from $20,000 to only $600 in payments, the IRS is putting out a much wider net that's going to tie many of us up into problems on tax reporting. First, this is going to screw up people who are not even self-employed. They're going to get tripped up in this. Let's say you sold an old TV or a bike for more than $600 and you received that payment in your payment app. Well, a 1099-K is going to go to the IRS, and you're going to have to show the IRS that you bought this and then later sold it and you actually didn't make any money. Good luck showing records for that on your tax return. And second, self-employed people and those with a side hustle are going to get screwed up in this as well. Let's say you're a graphic designer and you got paid $5,000 for services via payment app from another small business. Well, that company's got to send you a 1099 NEC for $5,000, but then your payment app's also going to send you a 1099-K for that same $5,000. So to the IRS, it makes it look like you got $10,000 and you're low tax on $10,000, but you only really made $5,000. Now, large companies have accounting departments and CPAs that help sort this stuff out and make sure that this income isn't double counted. But by changing the rule to only $600 in a payment app, this is going to really trip up the self-employed and the smallest of small business owners who do not have the resources to be tracking all this income and making sure they're not double counting 1099s. And again, I thought we were going to go after the big corporations to make them pay more tax. Let's go over some common questions. Does everyone receive a Form 1099-K from their payment app? Well, it really depends. If you have a business account and you've received over $600, definitely be expecting one. Now, let's say you have a personal account, but you've received payments on the payment app. If the purchaser toggled over for goods and services and not friends and family, and you received over $600, you're probably going to get a 1099-K. And again, this is where a lot of the problems are going to happen. Now, if the payments you're receiving are not for goods and services, you're not in business, they're just from friends and family or reimbursing things, those are not going to be taxable to you. So you may still get a 1099, but you may have to explain that to the IRS that this was not for goods or services. Again, maybe you sold something or got a reimbursement from someone and they improperly tagged it as goods and services. Now, here are some tips to help you deal with this new tax rule. First, use Zelle. Zelle isn't a payment app, so it's not subject to the 1099-K reporting rules. Zelle simply connects your bank account to another person's bank account. It's not settling the funds in the middle like PayPal, Venmo, or Cash App, and because of that, it's not subject to the new 1099-K rules. Now, just because you're using Zelle, and if you're using it to receive goods and services, but you don't get a 1099-K, doesn't mean you can hide the income and not report it to the IRS. But it does help make sure you're not getting misreported 1099-Ks from your payment app. You can use Zelle, and that may be a good way to avoid this 1099-K problem. All right, now the second tip, make sure you track your expenses and reimbursements. I know this is not a fun topic, and nobody likes to talk about bookkeeping or keeping good records, but seriously, this can be huge. And being self-employed opens up so many great tax write-offs like home office, auto, electronics, cell phone, internet, all these other things you use in your business that you're not expensing against your income. Keep good records, report your income properly and be honest, but take these expenses where you're using them in your business. They can save you thousands. Comment below with any questions and make sure you're subscribed, as we're going to be following up on this 1099 topic as we learn how the IRS is handling these 1099-Ks and what you can do to minimize your tax liability.